Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, we will be addressing your queries during the show. So please keep your comments coming on our live YouTube feed. All right, let's get going. Ajit Mishra is here from Religare Securities. Let's talk technicals with him. Morning, Ajit, and thanks for coming on board. Let's talk about the trade setup and, of course, how the SGX Nifty is pointing to a weak start. It's also the weekly expiry. So what kind of an action should we foresee on the Indian bourses?
Yeah, good morning, Karunya. So, Karunya, yes, we are seeing, weak global clues, and that is reflecting in the SGX as well. But if you notice in the last two trading sessions, Karunya, we are seeing positive bias across sectors, and especially, the select index majors, basically, which have helped the index to inch higher and cross the immediate hurdle at 20 EMA around 18,100 mark. So it's important whether we manage to hold that level in today's trade or not. And today being the weekly expiry, obviously we expect the volatility to remain high. So any dip towards 18,090, 18,100 zone can be considered as a buying opportunity after the initial gap down. And one should not maintain a very strong major stop losses. Close around 18,040 can be considered as the immediate support and the stop for this position also. And broadly, what we are anticipating that after crossing this immediate hurdle at 20 EMA on the DD charts, 18,250 to 350 is something that Nifty should test in days to come. So the tone is likely to remain positive. Yes, the global clues, earnings, they'll continue to trigger the volatile swings in between, but the tone is likely to remain positive. The challenging part is that banking might not perform in a similar manner, means the outperformance which we were seeing earlier might not come. So for that to resume, we need a decisive close above 42,900 mark in the banking index. So we have immediate hurdle at 42,650 and then 42,900. But meanwhile, since we are seeing like select stock from the banking and financial space like SDFC Twins, they are doing well. So we hope that this momentum which we are anticipating in days to come may also help the index to inch further higher.
Okay, all right. Let's also understand how some of these individual stocks are looking in trade. Of course, Adani Enterprises will be the big name to watch out for. They've set the FPO floor price at 3,112 rupees a piece. The cap price for FPO is at 3,276 rupees a piece. Retail investors in the FPO will be getting a discount of about 64 rupees per share. Now, investors can bid for a minimum of 4 shares in this FPO and thereby in multiples of 4 as far as the FPO shares are concerned. The company plans to raise about 20,000 crores via this FPO. Let's talk about Adani Enterprises, how the technicals are looking. Of course, everybody has talked enough and more about Adani Enterprises on the fundamental side. We at Moneycontrol have also been covering that. But if we look at a purely technical standpoint, how is it looking?
So, Karunya, we all know the kind of run-up that the Adani stock had in the recent years, and now from the last 5-6 months, if we talk about Adani Enterprise specifically, after making a new record high around 4,100 plus zone, we are seeing gradually profit taking or retracement, which is healthy as long as we manage to hold 3,200 mark. So the near term indicates that this sideways tone will continue, and for any sustained uptrend or any reversal of this consolidation bias would only come once we cross 3,900 mark decisively, or in case if we form any reversal pattern, which is not the indication yet. So for a very short-term perspective, I would say that one can avoid any fresh position at the current levels in case if the view is very short-term. And for the existing position also, one should look for any rebound towards 3,700 mark to exit longs, because indications are in the favor that this consolidation that we are seeing is likely to extend for at least a month or two.
Okay, all right, understood. What about HUL? Of course, the earnings for Q3 will be in focus today. It's an important one to watch out for. How's the stock likely to react ahead of that today? The street is expecting double-digit growth in their top line, but margins again could be tricky. And 4 to 5%, like we flagged off in the headlines, that's the kind of volume growth that the street is also factoring in. So, ahead of numbers, how could the stock behave today?
So Karanya, this stock made a new record high in September 2021, and post that, there was a phase of a decline wherein the stock corrected from roughly around 2,800 mark to 1,900. And since then, we are seeing a gradual recovery almost from last 8-9 months. The stock has been witnessing gradual recovery, and now it's again closer to the record highs levels. So we expect this consolidation to end soon, and importantly, the FMCG index also basically is favoring in the same direction. So as of now, in case if you are holding longs, you should definitely continue. 2,600 is we are eyeing as an immediate support, so that should be a stop. And above 2730, in fact, we expect the stock to witness fresh momentum, and that could help the stock to make a new record high. So in that case, above 2750, you can expect this stock to retest level close to around 2900 to 3000 levels in week or 10 days. So 29600 as a stop, you can continue to hold, you can buy fresh also.
All right. Okay. What about Asian Paints? Another important one to watch. How's that looking on the chart?
So in fact, both these stocks from the paint basket, Asian Paints and Berger Paint are slightly on the back foot. So if you remember that the stock was around 3,500 mark, in September 2022, and since then we have seen the stock gradually retracing and inching towards the monthly support area. Close to around 2,900 is what we are currently seeing. I feel that in case if there be any recovery, it might again attract selling pressure around 3,030, 3,050 mark. So it's still, I would say, from a trading perspective, it's a sell on rise candidate as long as we are not seeing any sign of reversal. And for the existing position, in case if somebody have playing a rebound, considering the kind of cuts that we have already seen, any bounce toward 30,000, 3,050 area, 3,100 zone can be considered as the zone to book profits and avoid fresh long at the current levels.
All right. Okay. Moving on then from earnings candidates. How is IndusInd? They delivered their numbers yesterday. Q3 profit was up 69% year on year. Provisions have fallen quite considerably. Net interest income has grown close to 19% YOY, again, largely in line with what the market expected. So is it likely to go down well with the street today that the numbers have been largely on expected lines?
So in fact, yes, Karunya, because if you noticed, within the private banking space, ICICI and Axis, which were earlier, acting as the leaders, are witnessing profit taking, but IndusInd Bank, which was earlier underperforming, is holding very strong. So that clearly shows the kind of relative strength that we have in the counter right now. And I feel that yes, the tone is likely to continue, but for any fresh momentum, one should wait because we have multiple attempts to cross this 1280, 1275 zone in the recent weeks. So I doubt that we're going to see any fresh momentum, but yes, the tone is likely to remain positive, and existing positions can be held with the stop up around 1185.
All right. Okay. And the last name on our list today is Aurobindo Pharma. They've received US FDA's Form 483 with 2 observations for Unit 1 and Unit 2 of its subsidiary, which is called APL Healthcare. These units are situated in Jadcherla in Telangana. They were inspected between 9 to 18 January. And 2 observations and that's the update that we have as of now for Aurobindo. How's that one looking? We're getting a lot of comments also from our viewers to tell them about Aurobindo. So take it away.
Yeah. So see, Karanya, if we dissect the pharma sector performance, you will see a couple of names which we have shared earlier also on the show, that Sun Pharma and Cipla are the 2 consistent players. Along with Torrent Pharma, which are holding strong or showing relative higher strength. Then we have stocks like Divis, Dr. Reddy's, which are trading in the middle of the trend. The tone is sideways to negative. And lastly on the list, stocks which are hardly seeing any respite, despite the rebound or pause in the index. So Oro Pharma, Biocon, these are the counters which fall in that category. And despite oversold position, we are not seeing any decisive rebound in the stock. In fact, on every marginal uptick, we are seeing the celebration, resuming with strong volume. So that clearly indicates that bears are completely under control. So I would recommend, in case if somebody is holding this stock, it's time that you should think about switching to Sun Pharma or any other pharma names which are trading around the record highs. And for fresh shorting also, I would recommend one should wait and let the stock rebound towards 460-65 zone. Around that area, one can look for going short, but not for the long trade.
All right, okay. Moving on to some more viewer comments and queries. Lots of interest in banking space still. So we'll address them together. But first, I want to start with Abhishek Chaube's comment, and he wants you to talk about Tata Tele. How is the chart looking for Tata Tele Services?
Yeah. So Tata Tele Services, currently we all know that the stock, witnessed almost 90-degree kind of a rise from the level of around 20 to 300, and the decline was also like we had a similar kind of retracement with lower circuits. But now the stock has started trading. Normally we are not seeing any circuit limits from last couple of months now, but the tone is still negative. So Abhishek, I would recommend you to please avoid this stock in case if the view is for trading. What we have observed is that in the recent corrective phase, wherein the market has been witnessing profit taking or a consolidation, mid cap and small caps are hardly participating yet. So we have like a couple of names from the mid cap basket. Definitely they have done well, but small cap we have hardly seen any participation. So the idea is, at least the view is, if the view is short term, you should stick with the index measures and counters which are showing relatively higher strength, and TTML is not on that list.
All right, okay. Moving on, we have some queries piled up from the private sector space, private sector banking space. Ishan wants to know prospects of HDFC Bank, if they can buy at the current level. Kunal is asking about ICICI. You have Rishi asking about federal banks. If you could tell us how all these three private lenders stack up. And, there's one query on PNB as well, if you could address.
All right, so yes, banking definitely remains on market radar always, and HDFC Twins, after like long underperformance, finally we are seeing sustained up move. And in fact, in the last two trading session, the contribution from the HDFC Twins was significant alongside with the select index majors. So we believe that this tone is likely to continue in HDFC Bank, and yes, you can consider going long even at the current levels. 1610 should be a stop. It's currently quoting around 1637, and gradually we expect the stock to retest the level close to around 1680 to 1700. Rest among these stocks, like Federal Bank, definitely looks very strong to us. Like we have hardly seen any retracement in this stock also. So that shows that in case if the market is going to resume the trend, and especially the banking index resumes, the positive momentum over 42,900, then this stock is likely to outperform. So yes, you can accumulate this stock to in the range of around 132 to 134, and 128 should be a stop. And since this trading at the record high, the upside is open. So you should keep on trading your stop losses on every rise. And rest of the stock like ICICI Bank, Karanya, we feel that it could be a marginal recovery from this trading perspective. But I feel that IndusInd Bank, Federal Bank are the better candidates to trade in. ICICI, it's okay in case if you are looking for investment opportunity, not for the trading. And lastly on the list, PNB. PSU baskets, off late we were seeing resilience, but in the last trading session the trend has reversed. So earlier it was the PSU bank were holding strong while the private banking were witnessing the beating. From the last couple of sessions we are seeing that it's slightly on the back foot. So it's still comparatively stronger if we compare it with the other PSU names, but I feel that for fresh buying, private bank should be preferred.
Okay, all right. Very quickly then, couple of more questions. Ajit Arun is asking if it's a good idea to add Lux Industries for the long haul at the current juncture. Good idea to invest here?
Yeah, so Lux, see, I was not tracking this stock for quite some time, and what the charts are indicating that in beginning of 2021, the stock was at around 1525, and then it rose to around 4800 mark by the end of the 2021, and again we are trading around the beginning of 2021 levels, close to around 1500 mark. So such volatility, I strongly recommend not to look as a buying opportunity in case if the stock has corrected significantly, from the top. So there could be some reasons behind this. So as of now, look for the positioning based on the financials and let the earning also unfold for the stock, and then you may take the decision. But as of now, not on the basis of charts that we are going to see any respite anytime soon.
Okay. Can you give your view on Cochin Shipyard as well? A couple of comments there. I saw the last one from a viewer named Rajiv. So if you could tell us about how Cochin Shipyard is looking on the chart.
So, Karanya, in the recent months, we saw the shipping related stocks were in traction, but I doubt that people might have taken stop losses because the momentum was very high. So in case if you are stuck at the higher levels, I would recommend you to hold because the retracement of the entire move from 280 to 680, it's almost like in the middle of that band, close to around 500 we are currently trading in. So there is a possibility that the stock might undergo into consolidation and witness a gradual recovery. But fresh buying I would not recommend because the kind of quantum or the momentum that we were seeing earlier, that we might not see, and it's likely to be a more prolonged consolidation phase the stock is likely to witness.
Okay.
So any rebound towards 560, 580 levels, you should try and exit.
Okay, Ajit, request you to stay on with us. I'll come back to you for your preferred picks in the market. I want to touch base with Karan. Touch base once again with Ajit. Ajit, your picks for the day, if you could highlight, what are they?
Yes, Karuna. So, considering one sector which is holding strong despite the recent consolidation trend in the index, metals. So, from the metal space, VEDL looks very strong to us. So, in fact, after JSW Steel and Jindal Steel, which are the top performers, now we are seeing that VEDL is also catching up with the leaders, and very short-term target is close to around 336, but one can wait for 350, 355 levels also in case of the view is positional. And one should maintain a stop at 317 for this long trade. Another stock which we like from the auto basket is again a leader because in the beginning of the recovery from the auto counters, M&M led the rebound, and after spending nearly 5-6 months under consolidation, it looks set for a next leg of up move. So one can look for buying M&M also at the current levels with 1390 as a target, and 1285 should be the.
Okay, all right. Thanks much. In fact, a lot of people were asking about Vedanta. So I hope it gives you some visibility and some clarity on what's happening. Ajit, thanks for joining us and for flagging off the technicals for all of these stocks and more. With that, it's a wrap on Morning Trade. Thank you for tuning in.